Good morning, this is Wayne Bilal with another smart profit maximizing moment. You know, we got through the first stage of the PPP loans. A lot of people didn't get in. I mean, there's a few banks that didn't step up to the plate. We'll cover those later. Now, it looks like there's more PPP loans coming. Uh, Holding my fingers crossed because it really looks like there are more COVID-19 loans coming. So if you didn't get in on the first one, very good chance of the second one. But we're going to talk about, there was more in that, 800-page bill that helped business owners and individuals during the expected crisis, which we're in the middle of right now. So if your business is struggling, you didn't get the PPP loan, or even if you got it, they're not funded yet, most of them, very few. It's moving slow, but it's moving. And for whatever reason, you're laid off, your store is closed, whatever, you're struggling. One place to look is your IRA, all right? In the bill, if you have an IRA and you're an owner who's been adversely affected by the COVID-19 pandemic, and we're going to talk about what that means according to the bill. The IRS still hasn't put out regulations. You're allowed to take a loan that can add up to $100,000 from your IRA. All right, and the literature's starting to call this CVDs, COVID-19, COVID virus distributions, I guess is what they're doing. But anyways, for shortage, we're going to call it a CVD, COVID virus distribution. You can take it from any IRA. You can take it in parts, all right? CVD amounts, and they can be recontributed tax-free without penalties within 3 years. We'll talk about if you can't in a minute, all right? So let's go through that. The 3-year period starts at the withdrawal date and can treat the withdrawals and later recontributions as federal income tax-free IRA rollover transactions. It means I can basically take the money out, survive this time period, and put it back in, and there's no tax consequence whatsoever. There's no income limits on this, so it's not something that phases out if your income's too high. There's no restrictions on how you use the CVD money during the 3-year recontribution period. If you're cash strapped, use the money to pay bills, recontribute later when your financial situation improves, help your adult kids out, pay down HELOCs. I don't even remember what that is. It's in the article here. What they're trying to get to is you can do whatever you want with the money. Now, some basic rules, okay? For starters, you can take one or more CVDs. You can take 30,000 now, 30,000 later, 60,000 later, whatever, as long as it doesn't go over 100,000, okay? And it can come from one or several IRAs. You can recontribute in a lump sum, or you can make multiple recontributions. You can recontribute to one or all of them. Hey, Lorenzo, I didn't see you there. How are you? If your spouse owns one or more IRAs in his or her name, your spouse is apparently eligible to do the same. All right. And matter of fact, you can create a new IRA and contribute to it. What do you need to do to qualify for this? Okay. Well, it's like going to need some IRS regulations on some of these, but right now, an IRA that was made on or after January 2nd, 2020, so could be something that you took out early in the year before we even knew all this, could be recontributed all the way to December 31st, 2020 to an individual who is diagnosed with COVID-19, whose spouse or dependent or qualifying child or relative who receives more than half your support from you is diagnosed with COVID-19, who experiences, here's kind of the catch-all, who experiences adverse financial consequences as a result of being quarantined, furloughed, laid off, or forced to reduce work hours. Well, that's not the one I was after, I'm sorry. Who is unable to work because of a lack of child care, so it covers that. This is the one for most of my business owners. Who owns or operates a business that is closed or had operating hours reduced due to COVID-19 and who has experienced adverse financial consequences as a result of, or who has experienced, and this is kind of the catch-all, who has experienced adverse financial consequences due to other COVID-19 related factors to be specified in future IRS guidance. I'm assuming the fact that we're going into a recession and 20 million people have laid off. The unemployment rate jumped from 3% to 15%, or whatever the heck it is this week. And truthfully, I don't think we're done, okay? Even when we open, I don't particularly see that it's going to actually get better quickly. As I warned you at the very beginning, we're looking at a minimum 6 to 9 month recession. So we're going to have to wait for the IRS to see how they interpret that last one. But my guess is they're going to interpret it pretty broadly. What if I can't get it back in? So what happens? All right, that's a good question. You're going to owe the income tax, okay, as if you took it out. You're going to owe the income tax on it if you don't recontribute. But you don't have to worry about the 10% penalty, even if you're not 59.5. Plus, when you repay it, the tax consequence can be spread over 3 years, apparently starting in 2020. I'm not sure how that's supposed to work. We're going to have to wait for guidance, because if I decide I'm not going to repay it, I put it on 2020, but I got 3 years to repay it. So how do I know I'm not going to repay it? I don't know. We're going to have to wait for the IRS to figure this out. I guess the way I'm going to have to do it now, let's say 3 years, I take it out sometime in 2020, 21, 22, 23, and 23 I haven't paid it back. The way I'm reading this, I can figure the tax, but I can split it over 20, 21, and 22. Does that trigger penalties and interest? I mean, there's a lot of stuff that we just don't know yet, okay? Can the one IRA rollover per year limitation prevent me from taking advantage of the CVD rule? No, this is above and beyond that, okay? Can I, and this is an interesting one, can I take the rollover out of my company retirement plan, like a 401k, 403b, regular pension plan? The answer is yes, if the plan allows you to borrow. So it's definitely a better way to go than cashing, all right? Because you can pay it back over a period of time. There's a few other things I'm going to throw in here. Actually, I'll leave it for another one. So, that's it. If you have an IRA, a 401k, or something like that, and you're struggling right now, even if you get the PPP loan, which has strings attached, or don't get it, though, I'm working. The ones that didn't get it, I'm working real hard to get them into this next batch, which it looks like is going to happen this week sometime. The banks and the SBA are already accepting applications, so I'm getting them in. I have a banker getting them in for me right now. We'll talk about that when it passes, because I'm sure they'll tack some more crap on it. So, hey, until next time, this is Wayne Belisle saying, let's make this our most profitable year ever. Thank you very much.